Hi everyone, I'm Raoul, and welcome to my show, The Journeyman. The Journeyman, as you all well know by now, is my journey into the nexus of macro, crypto, and the exponential age of technology. I try and move all of these topics along so you can see that they're all part of a bigger picture. Today, it's time to get back to crypto, which I know many of you are involved in. As you know, I think it's the biggest macro opportunity of all time. And it's still all to play for in 2025. I'm very privileged because I do a number of different things. Not only am the CEO and co-founder of Real Vision, but also my research service, Global Macro Investor, I've been writing for 20 years. And it's become a very famous institutional research service and maybe the best performing in all history, which I'm incredibly blessed at. But I also own an asset management company, Exponential Age Asset Management, where our core product is a fund of hedge funds that are crypto hedge funds. So we get to speak to the greatest crypto hedge funds in the world. And somebody I've got to know over time, who's one of our great managers, is Richard Galvin. Richard Galvin is a great thinker. He's a technologist, an analyst, but now, and for many years, is one of the larger hedge funds in the space. So I always like to catch up with Richard and figure out what's going on and where the future trends are, where we are in the cycle, and what opportunities we should look at. So let's sit down with Richard Galvin.
I mean, as a firm, we've generally run pretty low allocations to Bitcoin, relatively low, much lower than, say, its market dominance figures. Coming into last year, we had probably our highest allocation to Bitcoin we've had since about 2018, late 2018, early 2019. It just had such good tailwinds, right? Like things were just, piling on top of each other in terms of ETF demand. Other factors that just continue to sort of push it through and get that penetration amongst particularly the investor market, right? We also had what I'd say is a broader range of alts across both, particularly across AI and DeFi, which we've refined through the year, and we've started to sell down Bitcoin, which has been somewhat of a widowmaker trade over the last 2 years, but we have started to sell down Bitcoin over the last 2 months. And we have started to sell down since mid-year materially our exposure to what I'd say is protocols. So when we look at the space, we think there's kind of 3 distinct buckets of assets. You can kind of put Bitcoin as its own asset because I think it's a pretty unique kind of thing, right? Kind of a protocol on an app all in one, and it serves its own kind of purpose and valued in its own way. Outside of that, we think there's really 2 sort of baskets of assets. You've got applications on one side and you've got protocols on the other. Applications being built on top of protocols, generally or sometimes having their own. We've skewed our portfolios materially towards applications over the last 6 months, as we think that's the most compelling trade as we look to the medium, longer term, both in terms of where we think the tech is from a maturity perspective and putting our investment hat on where we think the relative values are when you look at those two parts of the sector on a bottom-up basis.
Bitcoin has once again surpassed the 100,000 mark, making headlines with a 39% gain in the last 24 hours and a 7.9% increase over the week. This remarkable surge is being closely tied to heightened institutional interest and substantial whale activity, signaling strong momentum for the cryptocurrency. However, experts suggest key factors must align before Bitcoin reaches its next all-time high. Recent whale movements have drawn significant attention. A wallet holding approximately $2.7 billion worth of Bitcoin transferred $1.05 billion into Coinbase Prime, a platform primarily used by institutional investors. While such large transfers are often bearish indicators, suggesting potential sell-offs, this instance highlights rising demand from institutional buyers. Analysts believe this movement aligns with a broader trend of over-the-counter trades that cater to U.S. institutions seeking to avoid market disruption. According to CryptoQuint, recent inflows into Coinbase Prime are reminiscent of activity seen before Bitcoin's last peak at 108,135 in December 2024. This suggests another rally could be on the horizon if the current demand persists. Despite the bullish sentiment, analysts caution that a slight pullback may occur before Bitcoin resumes its climb. Historical patterns suggest Bitcoin often retraces to a local support level before continuing its upward trajectory.
Built a different valuation model for this I want to throw by you, which is Metcalfe's Law. So I use Metcalfe's Law to value the networks. And what I tried to do was approximate the value of the protocols. And what I got to was two variables only that explain most of it. One was number of active users, let's say in a month. Okay, that makes sense. So that's the nodes on the network. And the other was how much value was transacted by those nodes on the network. Using those two things, I just multiplied them out. They produce almost identical charts to the price chart or the market cap chart. So then simplifying it down, it's like, well, this is why Doge has huge value, because it has a bunch of active users, but no value being transacted except the buying and selling. Ethereum has a lot of users, a lot of activity, and a reasonable amount of value because of all the applications layers being built on top. And I'm not sure how people accrue the layer 2s, but I just assume it accrues to the layer 1 in terms of the use of the chain. Bitcoin, because it just does big transactions amongst a number of people. I found that was the easiest way of explaining it. And much like we couldn't value Amazon, I mean, you were a tech analyst back in the day. I remember it was trading back in, 2012 at a P of, 2015 at a P of 800. And because it was valued as a Metcalfe's Law, it was a network and not a cash flow business.
The ability...
Yes, no, because we need to think about the layer 2s within this, because I kind of feel that, and look, this is contentious, nobody really knows how these layer 2s fit in, but there's the accrual they have on the base chain, okay, fine, from the security layer.
Which is only a fraction of what it would be if it was on Ethereum chain altogether, right?
But
it's a dilemma.
What you've done is built a much larger infrastructure, i.e. it's underperformed this cycle because they've overbuilt infrastructure. But I think the finance industry probably will only go to Ethereum because it's secure. It's like the IBM or the Microsoft of blockchains, and it's likely to be the place where it goes. So they may have overbuilt in the short term, but maybe it comes back.
XRP's recent price rally, which saw it surge nearly 50% in January to reach 3.39, its highest level in nearly 7 years, is showing signs of potential exhaustion. A bearish divergence has emerged between XRP's price and its relative strength index, RSI, signaling that the momentum driving the rally is weakening. While XRP's price has climbed to new highs, the RSI has trended downward, forming a descending pattern, a classic indication of winning buying pressure. Adding to the concerns, XRP is trading significantly above its 50-day exponential moving average, currently at 2.28. Historically, overextended rallies like this often retrace to their EMA levels as traders take profits and the market stabilizes. This setup suggests a possible correction of up to 25% from XRP's current price of 3.07. Despite the bearish signals, XRP remains in a broader bull flag pattern, which supports a longer-term bullish outlook. If XRP retests and bounces from the pattern's upper trend line, it could validate the breakout and pave the way for a move toward its next upside target of 4.42. However, failure to hold above the trend line could lead to a deeper correction with potential support near 1.90 or even lower at the 200-day EMA near 1.35. Don't forget to like and subscribe, and let's keep this bull run going.